Karan. Let me now bring on board Mr. Ravi Gupta, Chief Financial Officer of Jubliant Food, who joins us live from New Delhi. Ravi, morning. Thank you for joining us. Good quarter. You have managed to expand your margins, protect your margins in a tough environment. So what were the key challenges and what helped you, or how did you manage to protect your margins?
Basically, 2-3 fronts we have been working together with our business partners. First and foremost, since we are growing at the kind of 50% system growth and 30% kind of same-store growth, and this trend has been continuing for past 5 years. So what we do is we go back to the business partner that we are offering this additional volume to you, and in turn they get economies of scales and they pass some benefits of the economies of scale back to us. So that helps in reducing the impact of inflation to us. Second factor is we have to take a little bit price increase in this quarter, and probably it was there in the last quarter also. So these two factors helped us to reduce the raw material pressure. Raw material cost, which was kind of 26.4% in the last quarter, we have managed to bring it down to 25.5%. So kind of that is 90 basis points improvement which has happened from quarter to quarter itself. This factor and the price increase, another factor that you get efficiency in other cost line items also. So all this together with our cost containment practices which we have done over several years has benefited us, and that is the reason we have been able to grow these margins not only quarter to quarter but on a substantial basis from the last year Q3, which is 17.4% to 18.9% this year.
Okay, let's also chat about the same-store sales then at this point in time, Ravi, because you've seen a growth of 30% in the third quarter. Are you hopeful of maintaining this kind of sales growth in the next few quarters to come as well, or do you think it is going to be a Herculean task?
See, last year our same-store growth was 37%. When you look at 9 months of this year, it is close to 31%, 30.9% to be precise, and this quarter is 30%. For the full year of this, we are definitely saying that we can maintain it in excess of 25% for the full of financial year FY12. Now, we are not giving any specific guidance for the next financial year, which we'll do probably at the end of the next quarter when we review and present the full year guidance for the next financial year. At that point in time, we'll be in a better position to estimate saying what kind of growth is possible in the next financial year. But for this year full, we are confident that we can deliver in excess of 25% same-store growth. We are fairly confident about that.
What about the input cost measures that you were just talking about? Well, in the third quarter, we've seen a price hike of about 5%, but is that going to be a continuing trend, and can we see another price hike this quarter too?
The good part is that inflation trends have softened. So we are, whatever pressure which was there in the whole of 2011 actually, maybe 12 to 15 months period, that has come down. So even the inflation index which you are seeing in the market, we are seeing the real feel of it. So inflation trends have softened now. We don't expect any pressure in terms of raw material anymore. So next couple of months, definitely there's no price increase we are expecting. Rather, we may defer the next price increase for a couple of months. That is the debate we are having internally, because whatever worst was there looks like for next couple of months, that is a history and is not going to get repeated in the next 4-5 months.
Ravi, how exactly is your deal or your franchise license fee structured with Domino's? If rupee goes down against the dollar, do you end up paying more royalty?
See, we have two components of the payment which are done to Domino's International. One is the franchise fee, which is a percentage of sale you need to pay. Second is the store opening fees, which is in terms of dollar. So in terms of store opening fees, which is a $5,000 per store, we have an exposure in terms of foreign exchange. But as far as the franchise fees is concerned, we have no exposure. Our liability is in terms of rupees. So on the date of payment, whatever the exchange rate, we remit the liability, and that becomes that is our liability at that point of time. So there is no foreign exchange risk we carry in terms of franchise fee.
What was the total royalty payout for the quarter gone by?
The royalty payment is after end of the quarter, we get about 40 days approximately for royalty payment.
No, what was the quantum? What was the quantum of royalty payout in rupees crores or in million of dollars?
It is 3% of all the sales.
What about Dunkin'?
3% of all the sales, like sales for the last quarter is 277 crores. So about 8 crore rupees is will be the approximate liability which gets paid at the end of the quarter. In terms of Dunkin' Donut also there is a similar structure. We have franchise fee, we have store opening fees. It is a kind of similar levels. We have not yet announced what kind of deal we have. We'll be doing all together when we announce the Dunkin' Donuts launch, which is slated for the next quarter. So at that point in time, we'll be disclosing all the details, including our business plans, what kind of store capex will be there, what kind of profitability will be there on the stores, what are our initial plans for launch of the Dunkin' Donut stores. What we have disclosed is that in first 5 years, our target is that we'll have 80 to 100 stores of Dunkin' stores. And in 15 years, as per agreement with the Dunkin', we are bound to have stores in excess of 500 numbers for Dunkin' Donuts.
So in terms of new store launches, what is the number for this quarter and what is the number for this calendar year?
The last quarter we have opened 28 stores. This is the highest ever opening in a one quarter. For the 9 months we opened 61 stores. So considering that we could open 28 stores last quarter, we have revised upwards our guidance for the full year. What we are saying now that we will open a minimum of 85 stores in this full financial year. And just to add to that, last year we opened 72 stores and year before that we had opened 65 stores. So we are consistently increasing the number of stores, considering the market has immense potential and it is appropriate to tap at the right time. So we are consistently looking at the opportunities all around. At any point of time, we have about 125 to 150 potential location in our database, which our teams keep on hunting and keep on signing the deals.
Ravi, one final question which is of immense market curiosity, and which is that if the business is growing, why are promoters of Jubliant Food Works reducing their stake in the open market? If I look at the BSE bulk data, which the company reports on a quarterly basis, promoters have reduced their stake.
Yes, that is a fact that promoters have reduced. So promoters typically, since I don't control the promoter companies, what I know about it is that there is a debt in the promoter company. They're trying to reduce the debt at that point of time. Second is, since we have issued an ESOP in 2007, and there are fresh shares which are getting issued, so overall percentage dilution which comes in the financials is also because of that. Like when you look at last year December, they have 61 point something percentage holding of promoters, and now it is kind of 57 point something. So half of this reduction is because of the ESOP issued, the fresh shares issued in the market, and rest is what they've sold. So it is only small portion of the stake they've sold to reduce the debt liabilities in their books.